You do the introduction, okay?
All right, how is everybody doing? I hope everybody's doing well, especially within these times. I hope everybody's healthy and you guys are staying safe. Um, this is a extremely special interview and an absolute honor for me to, have a quick talk with Jay Awtani. It's an absolute honor to have you, and thank you so much for being here. Thank you so much for sharing your knowledge and, of course, your journey. And we also have Jsai, who he's going to be conducting most of the questions as he has a trading style very similar to Jay Tani. And we're just going to go ahead and get at it. Sound good?
Yep, thanks for having me, man, and thanks for the awesome introduction.
Thank you so much. It's a pleasure. Now, for everybody, just to get to know a little bit about Jay, I mean, he has a lot of things to bring to the table, specifically being an engineer. He started trading in mid-March of 2019, and as of right now, of course, going all the way to six figures, starting with an account literally from $3,000. So that is an absolute, I mean, landmark for a lot of traders. And we are going to be talking a little bit more about his journey, how, everything in terms of emotions and how he's used his current, I mean, I'd say I'd view you as a very mature person, specifically after speaking to you after, I don't know, like 20 minutes, I can already see that you are an extremely mature person. So I can vouch that he's an extremely good trader and he has been featured with Umar from Stock Market Lab. And I, it's just, again, an absolute honor to have you. So why don't you go ahead and let's just jump into, for anybody who doesn't know you yet, let's just jump into how you first started and just a little bit of back knowledge into, how was your journey and basically just go on from there.
Yep. So I'm an engineer by profession, as the first point says, and I got in the stock market because that was the Australian stock market. I bought a Comsec share, like a Combank share, and then it went up a few dollars. So that's how like I got into the stock market by doing the long-term investments and everything. And then around February of March last year, 2019, I started looking into day trading. I don't even know how I got into that or why people, because day trading, I was not even knowing the term what day trading is before March. And I'm not even
Hmm.
sure how I got to know about that term. But in March, I bought a course. And then I thought I read a few books about day trading. And then I was like, okay, this is a possibility. And obviously, most of the 99% of the courses that you can find online on day trading are based on the US stock market. And then I tried to apply the same strategy on the Australian stock market. I did that from March, April, May, and like yeah, for 3 months. But the issue is that in Australian stock market, the commissions are so high because the volume is less. In US, the brokers can earn the same amount of money by keeping the commissions less because the volume is so high. There are so many traders. But in Australia, I was paying $10 to buy and $10 to sell. So it
Wow.
was only going down from there. And then yeah, it's like I was paying $20 for one trade in Australian stock market. And then I was like, the strategies that I'm learning cannot be applied to an Australian stock market because the volume is very, very less. So you want the volume to be there for your strategy to work. That I was learning at that time. I'm still thinking of going back to Australian stock market only because of the time difference. I won't give up on the US stock market because I trade at night. So in Australia, the US stock market opens at anywhere between 11:30 p.m. to 1:30 a.m. depending on the daylight savings. At
Right.
the moment, it's 12:30 a.m. at night, the market open, but it's gonna change to 1:30 a.m. next month because the US, I think they are switching time zones. Not the time zones, I mean the daylight savings is kicking in US. That's why. So it will be
Hmm.
1:30 a.m. And that's why I'm thinking of going back to Australian stock market and see how it goes. But and then in March, April, May, I was trading in the Australian stock market. In June, I was like, okay, I'm not trading in the Australian stock market because there was a period in May that I was trading both. I was trading the Australian stock market and the US stock market with my job. That was too much for me. And then in June, I decided to give up on Australian stock market completely. In June, I bought a simulator account with Dash Trader Pro, and that's my current platform. I have been using that platform for the past more than a year now. In June, I was paper trading in the US stock market. And then July 1st is the financial year start in Australia. I think for US it's January 1st. But so on 1st of July, I went live in the US stock market and I started with shares. So as it says that I started with stock trading. I was trading shares, not options, from July to January 2020 for 7 months. Then in February, I funded my account with 3.2K because I was starting with options. In January end around, or February, I remember February 2nd or 3rd is a Monday. That's when I started completely with options with a 3.2K account that I grew to more than six figures now. It took me how many, like 8, 9 months. But I started with 3.2K. But when I was trading shares from July 2019 to January 2020, I lost around 10 to 12K. I was trading stocks. I deposited my account with 5K. Then it went down to 1K. I deposited 5K more. It went down to 2, 3K. Then I deposited maybe 2, 3K more. And then finally, I decided to move to options in February because I was paying too much of withdrawal and deposit fees. I was trading shares with an overseas broker. I'm in Australia, so I have very limited options.
Right.
I can't even trade with Thinkorswim. I think it's a good thing or a bad thing. I'm not sure. But TD Ameritrade is not allowed to business in Australia.
Okay.
So I was thinking of opening an account with Thinkorswim, but unfortunately, they don't business in Australia. They're not allowed legally, maybe. But Interactive Brokers, they have an Australian, I don't know what's called, like they have an Australian subsite or something. So it's ibkr.com.au, something like that.
Okay.
And deposit is free, withdrawal is free, and everything is good, but the commissions are slightly higher. And IB commissions are way higher than Thinkorswim. But if I compare to IB US, it's not that bad, and the fills are awesome. So I've been sticking with IB since July 2019.
And,
Sorry, February 2020, but July
right.
2019, I had a different broker for trading shares.
And of course, using that broker to go from $3,000 all the way to six figures. I mean,
Yeah, that's
what
why
a
I'm scared of changing anything. I know we have like Stock Market Lab has a good deal with TradeStation,
yeah.
and it's available for international clients as well. But I'm just too scared to change my brokers. And the other reason is that the broker is in US. So if I had to transfer funds, withdraw funds, it takes a week or 3, 4 days. I don't want to go through that hassle because in Australia, if I deposit funds, my account gets funded in the next few hours. That's a pretty good convenience as well. Yeah.
Right. So, just for people to understand what it takes to go from 3,000 to six figures, how was that emotionally for you? Because of course, if you guys don't know, there is already an interview about Jay on Stock Market Lab, which is also where I learned. And of course, he goes through the emotional side. But I just want to just reiterate what you mentioned about number one, I remember you mentioned specifically that if something took more than 2 years, maybe you should start rethinking about it or start looking into different ventures. I was kind of because I know that there's a lot of people that don't necessarily have number one, a lot of money, and number two, they're not too patient with themselves or they're just not looking into the long run. So as an account that started with $3,000, how was that mentally for you, growing it little by little, or was it just it went from little by little to exponential growth that something just clicked in a second
Yep.
and you understood?
Yep. So I was day trading when I was trading shares. That is a good point because from July 2019 to January 2020, I was day trading. I was trying to hold my trades for 10, 15, 20, 30 minutes sometimes. And now, if you see my Instagram, I don't even hold trades for more than 2, 3, 4 minutes. My average hold time is around between 1 to 2 minutes mark. So I changed from day trading to scalping. That suits my personality. And then other thing is that in my previous community before Stock Market Lab, I took a few other courses as well. So I was in Beable Traders, and in that community, I had a guy like he was a moderator. He was very good at reading level two, and then that's when I started reading level two around August of last year. But and then I started focusing on level two. It took me 2 3 months to get hold of bid spread and ask and everything like that. Then I was like, how should I take it to next level? I found a few PDFs online that were really good for me. And but the thing is that even if you get the PDFs, you don't know, because there are only few numbers of live examples available on YouTube or anywhere. People are sharing examples from February this year, just one example. Maybe you are sharing an example of Apple from January this year. Like that is only one example. So how can someone learn from an example? That's why I think level two is such a big thing in the trading community to learn. But you can just use that example and you don't look for the same thing. And because every stock is different,
Right.
you have to look what the person is talking about, what you need to look at, and then you need to find similar things on different stocks. For example, on Amazon and everything, or Tesla or Apple now, after the split, the Tesla level 2 is completely different than what it was maybe a month or 2 months ago. So you can't apply the same thing. Like someone is saying that the ask is going down. Yep, it's going down. But what do you see if the ask holds at a level, or the size is also increasing, or what's happening on the time in sales and everything like that? So you have to look at the recordings yourself, because there are not a lot of resources available. And that's how I learned. I have been recording my screen for the past 7 8 months every day, and I go through those recordings over the weekend. And if I don't get time over the weekend, I do it over the weekdays during my job or everything. But it's all about you finding the examples in real time and then applying those. Because if you only look at one video from 6 months ago, one example from 6 months ago, that won't help you with level two.
I see. And specifically talking about level two, um, I find that you recording and then actually using it as as a positive habit to go over in the weekend. What other habits do you think have added to your current success? Because I mean, if nobody knows, this is his IG at Jay Awtani Trades, and you do get to see a lot of your stories where you have a screen recording of your live trades or just a stock that you're looking at, and you're looking at level two. That always interested to that was always very interesting to me, because I'm like, okay, what else? What other habits does he do? So what other habits do you recommend to people who are where you used to be, but they are currently at right now?
Okay, so I have been a disciplined individual since the start. For example, I was a very fat kid in my school days. Like in my high school, I was really fat, and then I lost my weight. So that helped me. Like I know a lot of people talk about working out and everything as a part of your lifestyle, because that helps you be disciplined, to
Yes.
stick to your diet, to stick out to your workout or anything. If you are playing tennis, for example, or doing something, and you're sticking to it consistently, or even if you're not working out, but you like eating healthy, right? And if you do that daily, that means you are disciplined outside of trading as well, and that helps you being to be disciplined to your risk management. And so it carries on. If you are not disciplined, and for example, you give up on your diet or maybe your workout, so that means you need to work on your discipline to get your trading in check as well. Not only working out, like anything in your life. If you're disciplined outside of your life, it will help you in trading definitely, and that helped me as well. So I never ever imagined, because I was losing from July to January consistently. I lost around 12K mark. And then the only good thing I did is that, because my previous community was all about risk management and everything, and the only good
Mhm.
thing I did was on my platform Dash Trader, I had a max loss limit of I think 40 $50 to start off with. So if I reach $50 a day, I'm not even allowed to trade further. Like my platform refuses to place any trades. And then I was doing that, and then I increased from 50K, $50 to $70 to $100 in January 2020. And then when I moved to options, that was a different broker now, Interactive Brokers. So I was not using my default platform that I was trading with, but I still, because that platform enforced that rule on me to stop trading after the first $100 loss. In my head, I was like, now I'm moving to a different platform. So I placed my trades on Interactive Brokers TWS, but I still have my Dash Trader for my charts and level two. So now I thought this to myself that uh, now I don't have that platform to enforce that rule on me. And with options, losing $100 is it's very, very easy.
Oh yeah.
That's why in February, March, in February, I think I made $800 in the whole month. In March, maybe $1,000, something like that. So I was very, very careful because whenever I used to reach $100, I used to like my platform stopped me from trading after $100. So
Okay.
I have to stick to that rule. So at the beginning of that I think played a major role in my risk management and how good I am with managing my risk, because that was enforced as a rule from my platform upon me, and that carried forward, and then that rule changed into a habit. So I don't even now, if I'm taking, for example, if I'm trading and I know the market is good, I give myself maybe 2k max loss. And if I know that I'm not in the right mindset, maybe I had too many drinks or something, I was busy at work or something, I give myself maybe $500 for that trade, and I stick to that rule. Until now, if I have 1k max loss, I stick to that rule. There was one day I reached 11k loss, and then I reduced it to 5k. I had one big day, big loser day, and that was when my account was around 80 90k mark. I lost 11k in a day, but then I made some back. I went for a walk, I made some back, I got it down to 5k, which is good. But I'm still not proud of myself. That day haunts me still, that I was not able to manage my risk. I got to 11k red. My PNL was 11k red in a single day. So that's why I have messed up once in the past 1.5 years, which is, I think, a good thing and a bad thing as well, because I shouldn't have done that in the first place. But that happened only once, and that gave me a good lesson to not to do that again. So before sitting on my desk, and I keep looking at the market because I trade at night. So the pre-market opens at 4 a.m. US time. So that is around 7 p.m. my time. I look at the market, I see what SPY is doing, what the market is doing, if there's any news or what. And before trading, before like 2 3 hours, once I get to my desk, I have an idea like today doesn't look like a good day, and my max loss is maybe $500 for that trade, for that day, particular day. So I stick to that rule up until now, and that has helped me to grow my account.
Okay. And I'm currently wondering, are there any days where you just stay cash and you decide not to take a trade, or do you actually trade every single day?
I'm not proud of that, but I have taken a trade every single day for the past 1.5 years. I
Okay.
was supposed to take a day off, so I will be honest here. I was not doing really well. I was in my red streak maybe 2 months ago or something, and then I was not supposed to trade on Friday, but I was watching. I only took maybe 1 or 2 trades, so that is a good thing. But I was not supposed to trade on a Friday. I was supposed to take a completely off on that particular day. But I was still watching the charts, and then I took one trade. I lost money. I was like, okay, I'm only $100 in loss, and then it's okay. I just went to bed. But I haven't stayed cash since I started trading. I have taken a trade every single day. I'm not proud of that, but I have taken trade
No,
every
no,
single day.
I think everybody can understand that feeling, specifically since, you see something moving, you're like, I want to be a part of it.
Yeah,
So
but if I
I,
manage my risk, I think it's okay, because even if I take a trade and if it's losing, but the risk is controlled, I'm sure I'm learning something from it. So not
yeah.
taking a trade, it's good. Like if the market is choppy, you should not take that trade, because if you see, my first week of September was 20k a week. And
Mhm.
then for the next 3 weeks, my equity curve was chopping around. So I shouldn't even have traded for the last 3 weeks of September. But I thought, because first week of September I made 20k, so I was like, okay, I will reach 100. I made a post about this on my IG as well. 20k in a week, and I was like, okay, I can increase size, I can make this 100k month. And second week I had a loss. Third week I made some. Fourth week I lost again. So my equity curve was chopping around after the first 20k week. So I can think to myself that I should have stopped trading after the first week, but no one knows. You have to show up every day. Same thing happened maybe last Friday or last to last Friday. The market was not looking good at all, but I made, I think, 5k on that particular day. So it's all about showing up. It's not about taking a trade, but I think even if I take a trade, but the risk is control, it's all about risk management. I learned something from it. So that's
Okay.
how I justify my stupidity of taking a trade every single day.
No, and I'm sure it also defines your discipline within your $100 loss rule or $1,000, depending on whatever you decide for that specific day.
Yeah.
Now, I'd like to ask you about what what makes you decide what is a good day? Like what makes you decide, okay, I'm willing to take more risk today, or I'm not willing to take more risk today? What
Okay.
factors, whether they're fundamental or technical, affect
Okay.
that decision?
So it's both fundamental and technical. Fundamental means like I like trading. Most of my, I think 80-70% of my profits for the year have been from Amazon and Tesla. So if those stocks, I know that Amazon has one good month, it moves maybe upwards or downwards, whatever it is, but then it chops around for a month or two. And then now they have their earnings. So I think October to November mid will be good for Amazon. But after mid of November, Amazon will die down. Eventually, the volume won't be there until there's news or something. So if I see Amazon, Tesla, or my main stocks, I know a lot of people talk about Amazon and the Tesla because people who trade options, they talk a lot about Amazon and Tesla. When I was trading shares, I was not even looking at those stocks. But if you are trading options, I think these are good stocks. And if you have the account size, I think these two are the good stocks where if you catch a good move, you get paid a lot
Hmm.
and you can control your risk as well pretty well if you know what you're doing. Because my strategy is scalping that works perfectly with Amazon and Tesla, but I'm learning now day trading as well. So most likely I will move to different stocks, news-based stocks, something like that. But for scalpers, I think these two stocks are really good. And if these two stocks have news or something, then on that day I decide to increase my size. And maybe I think on Monday or Tuesday this week, something, no market was not moving at all. So I was like, no, nothing has news. Market is not moving. So I have reduced my size on that particular day. But if Amazon moves, I trade for the first 3-4 hours sometimes, because trading 3-4 hours in a single day is a lot for me. I usually get off in the first 2 hours of market open because I have to go to
Hmm.
bed as well. I trade at night. But if Amazon moves, I'm allowed to take more risk and in a potential, but I lead up to it. It's not like I go in with 50K position at the open. I don't do like that. If Amazon is moving, I will start with maybe 5-10 contracts. I will build up. For example, if I'm 2-3K up for that particular day, then I'm allowed to increase size, and I do like that. So if I am up 3K for the day and I'm okay with ending the day at 2K, I give that 1K mark so that I can increase more size and risk more in risk 1K more than my usual risk and try to make more, maybe reach 5K, 10K mark. But if I want to end my day green at 2K mark, I don't even trade at that time. So it's all
Okay.
about making a cushion for the day and sticking to it.
And of course, mentioning the fact that you only have about 2 hours that you put on yourself, right? You don't
I have learned this
necessarily
the
trade.
hard way because I have done this quite a few times. I'm up 3K for the day, then I end the day minus 1K. So what's the point? I have done this a few
Right.
times and I made a rule for myself that if I'm up 2K for the day, I'm risking 500 more or maybe 1000 more. But if I'm okay with ending the day 1K green, so many people do like that. They have a 5K day and then they lose everything and make it minus 2K. So if I'm up 5K, I, I say this to myself, literally, I say this to myself, like how much I'm willing to lose so that I can still end the day green and I won't be mad about it. So if the answer is maybe 3K and I see that the market is moving, I can take good trades as well. So if it's 3K, as soon as I reach 3K mark, 3K green, I stop trading. It's like I'm done. I'm happy with my 3K. I don't feel good about it. Like no one feels once you have 5K, you get it down to 3K. I don't feel good about it, but that's what you have to do to manage your risk.
Of course. And I mean, you started with 3K, now you're like literally making 3K within the day. So I'm more than
Yeah,
sure that
that's
you,
what, because my biggest day up until now has been 11.6 or 11.2K. I don't remember. But in the first 7 months of my trading, I lost 12K in 7 months. And now I made that in
right.
one day. So it's like it's all about, it's still surprising to me. And I'm thankful. Like I have reached that stage that I can make 12K or 11K. I was supposed to increase my size in September, October, but because the market has been very weird since I think July and August were the best months for SPY. SPY was pumping, made all-time highs and everything. But after September, October, SPY rejected. It never made another high, and then it rejected. I think SPY is setting up to fall, but still, like, it's in a chop region, and that's why I was supposed to get maybe 20k, 30k, 40k day based on what I was going. My momentum was upwards, but because of the market, I'm not seeing any big days anymore. But let's see how it
Okay.
goes.
And this is going to be my last question before Josiah takes over.
Yep.
But I wanted to ask you about sizing up, and specifically because a lot of people have a lot of trouble knowing when or how to size up. So let's
Mhm.
say you are back at 3K, you're back at the beginning.
Mhm.
And at what point, after, of course, this has a lot to do with your own personal confidence, and
Yep.
but if we were just talking about numbers and risk management, at what point, obviously you already mentioned what defines as a good day or a bad day to you, but at
Yep.
what point would you decide with that account number, which is $3,000, at what point on um, certain amount of growth would you say, okay, I'm comfortable adding this much more to my size, or whichever way around it?
Okay. So I was trading under 5k. I thought to myself like I'm reducing my size because I was not doing really well. In September last week, I had a red week, and October 2nd that week, end of September to first week of October, the whole week was red. Every single day was red. I lost around 7 8k on that particular week, and then I thought to myself, I have to reduce my size. The market is not looking really good. So at that time, I had a chat with Arshad as well on that, and he also was like, okay, he also reduced his size recently. And I don't even think that I have a six-figure account. That is a privilege. I'm thankful for that. But if I'm not doing well and the market, like, it's not about the market. Market is not supposed to do well 12 months a year. Market is supposed to do well only 2 3 months a year, and then the rest 8 9 months, it's all about risk management. So I was like, my account, I won't even think that my account is six figures. I'm going back to 5k. So I only thought to myself, I was literally thinking, even if I make $100 a day, I was thinking to myself, that is 2% of my account. Even though that my PNL, my daily PNL was showing 0.2%, 0.1%, or 0.3%, I don't care. I made $100, but I'm thinking to myself that my account is 5k, and I made 2% of that account. So I was happy about that. And if I'm losing $50, I was like, okay, I'm 1k down. Even though my daily PNL was showing maybe 0.01 or 0.1% of my account, I was not looking at that. So it's all about, it doesn't matter where your account is. If you are doing well, be self-aware and you are allowed to increase size. At this stage, I'm at a point that if I'm not doing well, I'm not very confident with my trading. I reduce my size based on what I am feeling and not how what the market shows me. We talked about that as well before this meeting. Some days the market is very, very choppy. Some weeks the market is very choppy. People are losing money, but I'm on my green streak. So I increase my size. It completely depends on me. It doesn't depend on the, if my confidence is high, I increase my size. If my confidence is low, I reduce my size. But my daily max loss is still based on what the market shows me. If the market is doing good, if the stars align, I am confident market is good, I'm allowed to increase size. But sometimes the market is doing really good and my confidence is nowhere near what it is supposed to be. So I go back to small size.
Okay. Well, I think that that's going to be it for the introduction, and just Josiah has a little bit more of the technical questions, so I'll go ahead and let him take over.
Mm.
So
Okay, so can you hear me?
Yeah, man, how are you?
yeah, we can hear you.
Okay, good,
Yeah, I can
perfect.
hear you.
Okay, do you want to take over the screen, Josiah?
No, right now you can just leave it there. There's just some questions, and at the end we'll get to a few charts, and I'll take over the screen then.
Okay, no problem.
Okay. So the first thing I want to ask you is, this is a big question for a lot of scalpers. Do you take plays based on the trend of a stock? Do you wait for your key levels to get hit, your pre-market high, pre-market low? So how do you make that decision? Because if you just look at chart patterns, flags and stuff, there's so many trades every single day, even on a single stock. So
Yep. Okay, so I'm allowed to increase size if a stock breaks a critical level. For example, for Tesla, I know in the top of my mind that 440 is a critical level, 425 is a critical level. For Amazon, 3320 is a critical level. So I trade these stocks every day. So I have these levels on the top of my head, what these levels are, the critical levels. But if I only see half the day is also a good level. So it depends if the market is doing good. And if it's breaking a critical level, I increase my size. But if it's not a critical level, it's just making another low of the day or something like that. I try to reduce my size because, especially with Amazon, I'm still comfortable with. But Tesla, after the split, I'm not very comfortable holding Tesla for a lot longer than I'm supposed to. So Tesla, I'm going small size these days, but it's all about if it's an intraday level. For example, Tesla is going down. I know that 450 is a critical level. It broke 450. Now it more made another low of the day at 447. So at the break of 447, I won't increase my size, but at the previous break of 450, I'm supposed to increase my size.
Perfect. And do you normally take these plays, for example, that 447 play? Do you normally take those, or you tend to just play that first critical level break and stick with that? Or how do you make that decision? So once you're
Yeah.
green, for example, do you play the next leg or?
Yeah, if I'm green and if I see that Tesla is selling off in the 5 minutes, it's in a downtrend, it's holding the trend lines pretty good, it's holding the 9 EMA on the 5 minutes, I will still take the 447 break, but I won't increase my size that much. If I am taking 20 contracts on the 450 break, most likely I will take 5 or 10 contracts on the 447 break.
Okay, perfect. So with that,
Because these days I have changed my mentality these days. Earlier, when I was doing really well, I used to increase my size. If I'm up 4K for the day, I used to increase my size. But these days, the market has been so weird. So I have been going the other way. If I'm up 2K for the day, I go to farther OTM, out the money, so that my risk is less and reward is like the risk to reward is less compared if I'm going at the money. So these days I'm doing opposite, so that if I'm up 2K for the day, I don't have to give up those 2K because of my confidence as well. The market is not good, and my confidence is also not up to that level that it was maybe 2 months ago. So I try to reduce my size and maybe reach 2.5K or maybe 3K. But if a stock moves, if it's in a clear uptrend or clear downtrend, like Amazon was maybe this week, and that's when I'm supposed to increase my size, I go big then.
perfect. Okay. So with that, so when you enter a trade, so I've looked at a lot of your trades. So when you enter the trade, do you place your, so I've seen sometimes you hold a little longer for where you put your stop loss. You give it a little bit of room. And other times if it pops the level and it doesn't hold, you're out immediately. So how do you make like that trade from Amazon where you posted that you would have lost 1.5K, but you lost $60 instead because you just got out the second. So I was amazed by that because I was in the same thing and I took a loser on there, but bigger than you because I got out after it came under the level and I saw the bids fail at the level. So how'd you make that decision?
Right? Yeah, I remember that was a 3380 break. I remember that on the top of my head. So for Amazon, I'm used to saying like if the 3380 breaks, I'm pretty sure it was 3380 mark. If you have my screen, I think you have the pick of that trade. But at the 3383 level, the ask was getting tested. It tested maybe 2-3 times, and I'm used to seeing Amazon. If it breaks a critical level, I don't want to see the ask being retested. I'm expecting to see a retest at 3385, not 3383, because that's where usually the ask is stacked up on Amazon every $5. But there was a big ask at 3383, not big comparatively, but it was still it was standing out on the level 2 box, and it got retested a couple of times, and then I got out with only $60 loss because I entered at the break of 3380 or 3382. The ask was at 3382, and then I got out as soon as it failed to break the 3383 mark. Because I'm expecting if it reaches 3385 and I see a retest at 3385, I decide to hold because that's what the stock is supposed to do. It's not supposed to move from 3380 to 3420 in 1 or 2 candles. There has to be a pullback, but I was expecting a pullback at 3385, not 3383. And then it retested a couple of times. The ask was still staying there, and the ask was, it kept increasing. They kept increasing their size on 3383. That is called refreshing ECN. So refreshing ECN is what happens like if you see a big ask at 3383, say maybe 500 shares on Amazon, but you see orders going through on the time in sales at 3383. So the ask goes down from 500 to maybe 100. Then there's another big ask at 3383 at maybe another 500 shares. So that is that the sellers are hiding their shares. They are not displaying their whole size. Maybe they have 20,000 shares to dispose of at 3383. You don't know that, but they keep placing their seller orders at 3383. So at that point, I don't know how big the seller is. So that's why I get out. I don't want to hold through that. If I'm uncertain about a thing and I know how level 2 works of Amazon, so I try to use that to my advantage. And now the other question is that if the ask would have broken 3383 and it would have pumped to maybe 3390, would I have been mad about it? No, because it saved me a lot. If I'm good at level 2, nothing is certain, because as soon as I, this one, as soon as I exited, most likely, that is 3480. Yep. So it would have gone to 3490 maybe, but I don't care about that if I'm not using my level 2, my experience with level 2 to my advantage. So if I see 3483 holding, I get out. But if it even runs to 3490, I don't care. That's
Yeah,
what many people.
you answered my next question exactly there, because I was going to ask you. So on almost every breakout, you'll see size right above the level, but we expect it to, I guess, get knocked out quickly. So you saw the size get retested at 3483. Like, not, you didn't just get out because you saw size once. You saw it get retested and hold.
Yeah, I held it for 2 minutes because the size, I think on the first green candle, it broke 3483 for a brief second. Then there was ask at 3483. Then on the second red candle, it tested that again. On the third red candle, 3483 was not breaking. I'm like, okay, I'm out. Now, even if it goes to 3490, I don't care. But as per my level 2 experience, I should get out. And that's what I did. And I think I saved with 20 contracts. I'm pretty sure the premiums went to maybe 11 or $12. So I could have lost 20 or $3,000 on that particular trade.
So, on the topic of stop losses, I had another trade. I'll try to find it, but I'll ask the question first. So, when something, let's say it's in a tight range near the top of a breakout and it cracks the level, but then it comes back down. So I've seen it, sometimes you're out the second and fails the level. Other times you give it a little space till that very nearby pivot. And it sometimes works out. Like, there's an Amazon trade. I'll try to find it while you start answering, but it came down for a minute under the level and then it popped back up. So how do you make that decision?
Yeah, I think I have that trade. You sent me that picture. Yep, I will try to find it. This is the one. I think that was on 12th of October.
Yeah, I
That
know.
was 450 break, I believe.
Yeah,
Yep,
I have
3450
it.
break. So I
This
entered.
trade,
Yeah,
right?
this one. Yeah, this one. So 345. I entered and I held through the two small pullbacks
Yeah.
because the ask never went down under 34. I think this is 3450. As far as I remember, the ask never went down under 3449 or something like that. Because me and Arshad were having a chat during this time at Discord. And I told him he also entered, but he exited, I think. But I held through that pullback because the ask never went down under 3449 and I was already up for the day. So it depends. I was risking, when I entered 10 contracts, I was like, I'm risking $500 on that trade because I'm already up for the day. And if the ask would have broken 3449, I would have got out. But the ask was holding and the SPY was also going up, I'm pretty sure at this time. So if the
So,
ask is holding 3449 and the SPY is also going up, so I decided to hold this trade.
so you've talked about how the spread increasing is a bad sign overall
Yep.
when you're in a trade. So in terms of that, my question is, so I've seen that multiple times, and most of the time it tends to at least pull back for a little bit after that. So how do you make the decision if let's say you're in a trade, you just take the breakout and the ask keeps stepping up, but the bid's not moving? I've seen that scenario happen a few times. So in that time, do you get out of the trade or do you take the chance and hold? Because my question is, especially for people with cash accounts, once you're in that trade, you'd rather not lose that buying power for the day. So if you see that type of sign where you're not 100% sure it's going to reverse, or it's not like huge size on the ask where you know it's about to turn down, but it's an indication it may potentially do that, where do you go from there?
Yeah, so from my personal experience with Amazon, if the ask, for example, let's look at this example. If it breaks 3450, the ask is at, for example, 3450.60, and the bid is at 3449.80. That is 80 cents of spread at that time. But if SPY is going up, I usually give it more room because Amazon most of the times, if Amazon has a breakout, but SPY is having a red candle, it fails. If the bid is not stepping up. So if the bids are stepping up and the ask is also holding above that critical level, I decide to hold that trade. Sometimes it happens because in this case, in this particular case, ask went to what did I say, 3449, and the bids were at 3448 or 3448.5, something like that. So if that is the case, the bids are still holding. Now, if I see that the ask went down to 3449 after breaking the level, but the bid stepped down to 3446 or 3446.50, or maybe even 3447, I will get out at that point because I don't want to hold through that. If the bids are stepping really, really low after the break, I exit. But there are many cases like as soon as I enter and I don't see a clear break on Amazon, my eyes are on SPY as well. SPY is just beside my actual trading. So I look at maybe 6 stocks on my screen that is above on the top screen on the screen in front of me. I usually the charts I trade, the stocks I trade are directly in front of me, and I have SPY on the sides. So if Amazon fails a critical level, but if SPY is going up, I decide to give it more room, and especially if I'm up for the day. If I'm not up for the day, I don't take that risk.
Okay. So really quickly, so while we're on this topic about how you choose to take profits, because sometimes I've seen that you get in and you're out the next minute, it pops, and often you're right, you're out and it doesn't continue. And other times it does, but other times, like I guess this trade's also a good example. You hold it 4 bars up even after the breakout. You don't sell on that first candle that popped. You wait and you kind of nailed the top. So where does that decision come from? Is that again seeing the tape, seeing when the tape, and also on that note, while we talk about that, do you use tape speed and the momentum of the tape overall?
Yeah, I use the time and sale speed, but at this time, I think my profit target was at least 3455 at that time, but never touched that level. And I was pretty sure that if it breaks 3450, it's pretty, because price action is not always clean. So it's not supposed to go to 3455 in one candle. But if the volume is showing up, if the red candle volume is low, the green candle, the volume is stepping up. So what volume means is that a lot of orders are going through on the time and sales. If the time and sales show me that if after the break, so it doesn't matter. Like other important thing is that if the bid step down to 3449, if it breaks the 3450 level, the bid step down to 3449 and the ask is at maybe 3451. But on time and sales, I'm seeing orders going through above 3450. That means even though the bid is at 3449, the transaction is not happening at under 3450. So that is a very good sign at that time. So if I see the transaction is happening closer to the ask, that is a good sign, and I decide to hold that trade. On that particular day as well, I think the bid stepped down, but the transactions were still happening near the ask. So bid and ask, buyer and seller, bid are like buyers, ask sellers, whatever that is. But if the buyer is stepping lower, but the transaction is still happening near the ask side, so that is a good sign. That is a plus sign that the transaction is happening on the higher side after the break.
Okay. So on that note, so can you see this trade, the one that I have this with?
Yep.
So I've noticed that 80% or at least 90% of your trades you take once the key level breaks. You take it after the key level breaks. So my question is, you see, this is something that I personally struggled with a long time. So here you're getting in after the rejection. You see it rejecting. It's coming back down, but you get in before low day breaks. And I've seen you do this, I guess, on a few other trades. And I know that some people trade fully like this. They'll only get in before the breakout, counting on it breaking. So how do you make that choice? What's your opinion on this idea of anticipating the breakout, trying to get in before the breakout versus getting in after? Because you're one of the few I see who's always in after, but normally right and getting good fills and getting filled at the time.
Yeah, so that is related to the question you asked me about the size, and when I increase my size and when I reduce my size. So on the first breakout, that was the break of the low of the day. I increased my size 10 contracts. On the third trade itself, that was the break of a critical level and I got faked out bad. I lost big money on it. I had 20 contracts, but on the middle trade, I only took 5 contracts. That was because it wasn't my strategy. But Tesla has been in a downtrend. If you look at the 5 minutes of this, it was really clean. It tested the VWAP again. It never broke above VWAP, but there were orders stacked up at 400. So as soon as 400 broke, I entered, because from Tesla, from personal experience, I know that if it breaks 400 and if I see a lot of red just before the 400, I know it can drop $3-4. So I don't want to miss that move. That's why I entered with small size. And I think I made most money on it. It went from 1016 to 1185. And on my first trade, it went from 1521 to 1605. So I can take less shares, less contracts, and make more money or same amount of money. So that's why it's not like my style of playing. But if I see a critical level, another like $400 is breaking, that is a good sign.
Okay, that makes sense.
And it broke
So
that trend line as well. I have been including that in my strategy as well. If you draw
yeah, I
1 minute,
noticed that. I noticed that. Yeah.
yeah, that's one.
So yeah, that makes sense. Okay. So when you take the first, let's say the first breakout, and so you said you got faked out the first time on low day on this trade, right?
No, not on this one. The third one, the last one.
Okay. So
Yeah.
if you see this type of wick and let's say it comes back down and it breaks that level again, how do you trade that? Because I guess in this market, I've seen this way more. It will fake out, it'll come back down, close below, fake out again, try again, same thing. So how do you deal with that? Because I played Zoom and this happened 4 times in a row, the same level.
Yeah.
Broke above the level, closed with the wick. And well, I sadly tried all 4 times, but how do you deal with that idea?
Yeah, so that 395, that dotted line on my chart, that is a pre-market low.
Mm-hmm.
And I don't mark it pre-market low. It's automatically marked by my platform. That is one of the reason I'm not switching my platforms, because my platform already marks the pre-market low, pre-market high, yesterday low and yesterday high for me. I don't have to do it every day. It
Wow.
automatically marks it for me. So that is, I think, very, very a big plus
That
for
is,
that
yeah.
particular platform. Yeah. So it marks 2 days ago low, 2 days ago high, 1 day ago, like yesterday low, yesterday high, and
Wow.
pre-market low and high. It marks it automatically. But now if that wasn't a critical level, for example, that 395 was maybe at 398, I would have held through a bit longer. But I know at 395 levels, there are chances of fake outs. And fake outs mean that you got faked out by the market maker. So I just feel ashamed of myself that I got faked out and I exit, because I know if a fake out happens at a critical level, it's not going to retest it. And if you see Tesla moved up to $505, so I know like the fake outs near critical levels are fake outs, so you should accept it that you got faked out and get the hell out, because Tesla premiums and Amazon premiums, they drop really quickly if you get faked out. Because I entered
Yeah.
after the break, 395 break, my fill price was 8.40. On that same candle, on that same candle, that was I think 1017 candle, it went from 8.40 to 7.55. So I lost around $1,800 on that one trade. So it's
Yeah.
just
Wow.
about accepting it. As soon as you get faked out and it's a critical level, I know that I got faked out. So there's no point holding that trade then.
So wait, about that idea of knowing when you got faked out. So can we take this chart and this chart? Can you tell me what told you the difference between these two? That here you knew other, like the tape told you to hold, versus here you're sure and you're out really, really quickly. That it was a fake out versus this was something willing to hold. Was that fully based off the idea that the ask was holding up here, and here you know that it's a critical
And
level?
Spy was also giving me an idea. So Amazon, if you look at Amazon, doesn't have to follow Spy, but most likely it follows QQQ or Spy, Amazon. But Tesla has a mind of its own. Some days it follows Spy, some days it doesn't. But Tesla, it's just my personal experience. I have got faked out on Tesla a lot on the break of critical levels. So that's why if I am in Tesla, I don't decide to hold through a fake out. But if it's Amazon, I still decide. I know how level 2 works on Amazon. If the orders are stepping down, bid and ask is stepping down. But if the orders are still going through at the ask, I decide to hold. But Tesla, I have lost a lot of money on fake outs on Tesla. So I'm just scared of holding Tesla, because Amazon fakes out sometimes. Yeah, for example, on the last retest of 3450, that was a big red, 3 big red candles. But Tesla, I know buyers step up aggressively on Tesla from my personal experience. Like if a critical level breaks and buyers want to hold that level, they won't give up for the whole day. And Tesla, if you look last week, I think 3 or 4 out of 5 days, it always makes a V reversal. It never makes a
Yeah.
W reversal. So it always makes a V reversal. So I'm not holding to that.
Yeah.
I know that it makes a V reversal at a critical level. So I know if I got faked out, what's the point of holding? If I know already that it makes a V reversal every single.
That makes sense. Okay. So this was, I know you mainly trade Amazon and Tesla, but this play, okay. So this type of play where the original breakout, you didn't play the original break of the pre-market high, it pulls back in and tests the level, and it takes that place. So I noticed that if we go, let's take one other chart. It's easier to give these examples with like two charts and compare them. So
Yep.
give me a second. I'm trying to get the other chart. Okay. Let's take this one. So once it breaks high of day, you never re-enter. You don't take this next high of day break. You don't take it once it holds the level. So I noticed that often on Amazon, your main play is just the critical level breaks. Not really much continuation, not really much trying to catch it after you get that first move. So what makes you make that choice to not try to ride this up over and over, re-enter on the pullbacks and play it up? Or is that just not how your style is? So.
Okay, so if Amazon moves, everyone knows that this is a common sentence. If Amazon moves, it moves. And I knew that Amazon is not moving on that particular day. So the volume was not coming in. And that trade as well, I had to wait maybe 8 minutes or 6 minutes to get that amount of money that I made on that trade. So I know that the buyers are not stepping up aggressively. And if you look at the red candles as well, if you look in maybe August or July when Amazon made a huge move, $300 move in 2-3 days, it was giving a pullback and then move, giving a pullback move, giving a pullback move. But at this time, I knew that Amazon is not in play. At that time, there's no news behind Amazon. So that's why I did not take it for the another high of the day. Because for
So
the first...
unless there's a really good reason, it's better just to stick around the critical levels, play those, and not try to keep entering and exiting unless there's a very, very good reason, like earlier.
Yeah, if Amazon is moving like this day as well, on what day was it? Maybe 15th of October. Yep. On 15th of October, Amazon was moving very nicely. So you get to have a feeling, because I have traded Amazon so many times. If you know that it is moving on for that particular day, then there's no point. Like I trade the high of the days as well. So I don't even trade the critical levels. I mean, I trade the critical levels, but I trade the high of the day as well. But if I know that Amazon is moving on that particular day, because everyone knows that Amazon can make $150, $200 move on a day it has news or something. So if it has news, I decide to take the high of the day depending on what the level is. If it makes the high of the day at maybe 3477.5, then usually I wait for 3480 break.
Okay. So I have two more questions. So this one about Amazon. So most people would be not comfortable getting in here because it's already up like 5 candles. And I've seen on a lot of posts, you avoid a trade where it's already up 5 candles and take the next pullback or the next breakout. So how do you make that decision? Because I've missed plays and sometimes I feel that these are chases personally. So it's hard to make that decision. Is it worth getting in when it's up this much? How do you make that decision?
Yeah, so that was chasing, to be honest, and that's why I only entered 5 contracts, because if it would have consolidated near the 3365, that is the pre-market high, I would have entered maybe 10, 20 contracts, but I only entered 5 because I knew it was chasing. But if I know I'm chasing and if it pulls back slightly below 3365, I'm out. That's what I do, because if you are chasing, especially chasing is the worst thing. If you're trading options, the premiums are already jacked up. And one small pullback will drop your premiums a lot. So if I know I'm chasing, I enter small size. And if it gives me even a single sign that the stock is about to pull back, I exit. So that was chasing. I'm not denying it. But if it would have pulled back to 3365 just even once, I would have got out. But the momentum was strong and it broke 3365 like a piece of cake. And that's why I entered 5 contracts at the break.
Okay, so this last question is in short based. So if you had to classify I think I sent you this question. If you had to classify your trade types, what would you call them? Like if you had to, because you only take a few types of plays overall. Your trading style is like amazing in how it's not so complicated. It's just the tape and doing what you know works. So how would you classify your plays? How would you put it?
Yeah, I'm a trend scalper. So I'm not a trend trader. I would say that I'm a trend scalper. Okay. That means I don't trade against the trend ever. I don't think so. I have traded a reversal in the past 7-8 months since I started with this options account. I don't like trading reversals. I know you can trade reversals and make very good money from it, but personally, I have lost money on it, and it's just not how my brain works. If a trend is following, my brain always tells me to go with the trend. But I know, like, if you trade reversal, you can get very, very good risk to
Yeah.
reward, because sometimes based on level two, I can see, because I know that Tesla makes a V reversal. So I could have got into calls at the 395 break from 395 to 405, but I don't do it. And I think I should add it to my playbook. But that's what, because my main strategy is scalping. That's been working out for me. My win percent is high. I'm able to make good amount of money. But my next goal is to get better at day trading and trading reversals. Not reversals at this point, but trading, maybe holding my trades a bit longer. So if I'm entering 20 contracts or 10 contracts, I will most likely let 4 to 5 contracts run for the day until it makes a new maybe 15-minute low or high, depending on what the trend is.
Okay, so you said the word playbook. So I was just curious, when you talk about that, you're talking about SMB style of playbooking, or?
Yep, I have my playbook. So I've been having my playbook since I started
Yeah.
trading. So I was not even knowing about SMB at that time, but my
Wow.
first community, they used to talk about playbooks having a set defined strategies you're gonna trade. So for me, I was day trading, and then I had my playbook. Then I switched to scalping. It worked for me. So that's why keeping a journal, keeping a playbook, not even like a proper playbook. What I have is that what works for me and what doesn't work for me. So I just need to know what usually works for me and how can I increase my size on that particular strategy. But my playbook also has to how to hold the trades longer. But that's what I'm thinking of doing. So if I enter 10 contracts, I will partial out and I will let 2 contracts run for the day. Not for the day, maybe until it makes a new 5-minute high or low, something like that. So playbook is, if you don't have a journal, you won't know what your edge
Yeah,
is.
for
But
sure.
if you have a journal, you can go back and see what you do good at. And I haven't traded reversals, but I know a few traders who trade reversals very nicely. The risk is really less. Maybe your risk is $100 if you catch the bottom or the top of a stock.
Yeah, top and
And
bottom reversals. Yeah.
you can literally make like $2,000 based
Dollars.
on, if you only invest $100 on
Yeah.
that trade. So that is a good thing. And I know traders who do it. But for reversals, I believe you can go off critical levels, but you have to look at many other things as well,
Yeah.
because reversals are technicals. You have
Yeah.
to look at the EMS crossing, moving averages crossing. I used to do that. I know how to do that. But you have to look at many other things, not only critical levels if you are trading reversals.
Yeah. Okay, so just last thing. So I think that the most important thing is, you told me this, you posted this before. Your most important thing is keeping your losses really small.
Yeah.
So can you just talk through? I think the hardest part for a lot of scalpers is sometimes if you set a hard stop loss, you follow that. Sometimes it's late by the time it comes all the way back down to your stop loss level. So how do you make that decision? Sometimes stop out above the level, sometimes get out slightly green, sometimes hold for that bigger winner. How do you make that decision of where to stop out versus when to maybe hold through a little red?
Yeah. So this answer, to be honest, if you show me a trade of mine, I won't even remember what I did at that time, but it's all about the market direction and the intuition. So that's where experience comes into play. I remember me when I was trading maybe a year ago in November, December last year. I was not knowing what price, I knew what price action is, but once you see charts, once you get the screen time, everyone talks about screen time, you kind of get an idea, like, to hold this trade a bit longer, what's the price action do. For example, if you drive a car, right? If you're driving the car for the first 6 months and you just learned how to drive, and if you see a car coming towards you, or you won't predict an accident happening because you are too scared of driving at that time, right? But once you get pretty experienced at driving, maybe 4 5 years, 2 years, you can predict accidents happening. So you are going to press your brake before it actually happens, right? So that's what happens with trading. Once you get enough screen time and you get the price action, you get to know, like, to hold this trade a bit longer or let it go. It depends on many factors. Firstly, I would say that my account, if I'm green or red for the day, that's how I decide to hold my trade. Then you can say that I'm trading my PNL. Yes, I am. That's how I'm managing my risk. I'm not trading my PNL, but if I'm green for the day, I can't go from green to red. So that is called managing the account. But if I'm already red for the day, I won't even take trades that are not in my playbook. So if I'm green for the day, I'm allowed to let maybe 2 3 contracts run for that particular day. Second thing is that what the overall market is doing. If SPY is in my direction, I decide to hold that trade, especially if it's Amazon, Tesla. I don't think so. It's following SPY these days. Like it's following the overall market, but it has sometimes SPY decides to go up. Tesla has been dropping like every single day for the past week. It's been in a downtrend. It gaps up and it drops. It gaps up and it drops. So it depends on my account size. It depends on how confident I am. Like if I'm on a green streak or I'm on a red streak, if I'm green or red for the day, if the market is showing, if the market direction is in my favor, I decide to hold that trade. So it's all about intuition and the screen time you get. You get to know about the price action eventually.
Okay, so I heard something interesting. I just want to ask you again. So you never go green to red. If you start the day off with a green trade, you stay green, correct?
No, so I learned this the hard way. So I have been from green to red. I remember one day I was 3K up for that day, on that day. I went to from plus 3K to minus 2K, and that hit me hard. But good that I stopped trading after minus 2K, because from going from minus 2K to minus 5K is not, it doesn't take time with option. But my stop loss for that day was minus 2K. So I've stopped trading at minus 2K. And that's how I learned. Like if I'm green for the day, and if the market is not showing a clear direction, I'm not allowed to risk maybe 30% of my profits. So these days, if I'm up 3K for the day, I just stop trading if I reach 2K.
Okay, so I think that's it. Emiliano, are you there? So before he jumps on, is there anything else you want to add? Anything else that you think is really important, especially for new traders, building confidence in your tape reading, trading overall? Any
Yeah.
suggestions?
Yeah, I was having a chat with Emiliano and you as well. So it's like you started at the perfect age. You are 17. I think you are 17, right?
Yeah, I started at 16, so now yeah, I've been
Okay.
doing it for a
Yeah,
few
you
months
started at the
now.
perfect age. Just take it slow, gain some confidence, get the screen time in, because it's all about screen time. Anyone can learn trading, but it's how much time you give actually looking at the charts and not your PNL and not manage. And if you keep looking at the account size, your account is 5K, 5.2K, 5.4K, 5.6K, that would work. Instead, look at the price action, record your screen and get more screen time if you can. For me, I can only trade for the first 2 hours of market open. And I know I'm behind people who are trading, who are sitting in front of the computer for 8 hours on that day from 9 a.m. to 4 p.m. But I only trade from 9:30 a.m. US time, New York time, whatever that is. So 9:30 a.m. to maybe 11 or 12 p.m. So I'm only getting 2-3 hours of screen time compared to traders who are getting 8 hours of screen time. So how I compensate for that is I go through my recordings over the weekend. So that helps me a bit to get the screen time, because it's all about getting used to the price action and how a stock moves.
Okay,
Okay.
so yeah.
All right, Jay. Thank you so much. You guys can hear me, correct?
Yeah, I can. Yeah.
Yeah.
Awesome. Well, one more thing that I wanted to compensate, and it's specifically on that habit of recording. Do you just leave your recording software on throughout the day and just let it run until the end of the day? Or do you record your trade, end the recording, and then just look over it on the weekend?
Yeah, I only trade the first, like if I'm trading for the first 2 hours, I only record the first 2 hours. And that's when on the weekends, I only go through my trades and a bit here and there, maybe 5 minutes before the trade, 5 minutes after the trade. And I don't record the whole day, because no one can watch 8 hours of recording over the weekend, 8 hours, like 40
Right.
hours. You have 48 hours over the weekend. You can't watch 40 hours of recordings. But I just watch the first 2 hours again, because sometimes I'm trading a different stock, but my recording is of a different stock. But I know that the recording of a stock I did not take that trade. It's breaking a critical level. So what happens around a critical level and everything like that. So it's all about getting for me, it's screen time plus getting the level 2 time in. So if I look at the level 2 of a stock, I get a better idea of what it can do, of what it's supposed to do, and something like that. So that's why on the weekend I go through the level 2 and the charts.
Right. Okay.
So to answer your question, it's only the time I'm trading. So for the first 1 to 2 hours, sometimes I end the day in the first 15-20 minutes. So I only have 20 minutes of recording.
Oh, okay. So you can literally just see where you could have even like traded better or just see different patterns? Do you
Yeah.
like look at different patterns within the stocks that you're currently trading in, or do you like solely focus on the level two,
Yeah,
like
look at the patterns.
numbers?
I've been trading triangles and everything. I'm looking at level two triangles because level two sometimes it doesn't work. If the market is choppy, level two basically helps you detect if a breakout is strong or weak. But if the market is in a range, there's no point reading level two because most likely it's going to be a fake out. So that's why I look after the patterns as well, but the recording is mainly to get the level two screen time in and to so my journal is full of what could I have done better on that particular trade. So level two, that recording helps me like, okay, I could have held this trade a bit longer because, for example, if I entered Amazon at 3450 and I exited at 3455, but the recording shows that there was no reason for me to get out at 3455. So I try to implement that the next week.
Okay. And here is something that I know that you mentioned within also Umar's interview. You mentioned that trading should be, or do correct me if I'm wrong, or if I may like mix up the words a little bit here, but you mentioned that trading should not be like 100% your life. Like you should have something else to focus on apart from trading because it
Mhm.
overtakes and you start overthinking stuff. So
Yep.
what other things, I mean, I know that you're an engineer and everything, but what other things or what other habits other than physical activity do you think are also a healthy part of a trader, and what other things can people focus on?
Yep. So Melbourne has been like my city has been on lockdown for the better part of this year. For the past 7, 8 months, it just opened up for 2 weeks, so the gyms are closed. I haven't been working out that much, but I go for bike riding and everything.
Mhm.
But these days, if you make trading your life, it's easy to dwell on your mistakes and not improve on them because once you start thinking that you can't do that, that's the worst thing that could happen because I trade at night. So once I wake up in the morning, I journal at night itself, or sometimes in the morning. I take a screenshot of my trades at night for sure. But sometimes I journal, like I write what could I have done better at night itself or in the morning for the first 1 hour. As soon as I wake up, I have my coffee, I go through my journal. That's it. That's all I do over the weekdays. And then I do anything because I've been working from home and I focus on different things. But trading these days, I don't even feel if I'm red or green. I had a full red week, as I said in September, last week of September. But these days, I don't even feel the red streak, something like. So it's all about the confidence. I have been through so many red streaks. I The first 7 months of my trading, I was on my red streak for 7 months. So once you see enough red green days, it's all about it's the part of the game. It's the part of a job. You're signing up for it. You can't see all green, and anyone who shows all green, it's most likely faking. So
Yeah,
I accept the fact, and these days, red or green doesn't affect my lifestyle. It doesn't affect my mentality. I mean, it still does. If I'm red, I think about it, but it's getting better as the months go on, and I've been trading, and the confidence factor comes in once you have a red streak and you get back to green days, and the next red streak is better than the last red streak because you know that you came back from it once. So now you know what you have to do to come back from it again.
right, right. And that would actually bring me to my last question. Well, my
Yep.
second to last question, actually, because I do want to ask you one more.
Mhm. Yeah, I
But
would.
in terms of, let's say you have a very green streak, like an exponentially huge week, month, or whatever,
Yep.
do you decide to size up or do you decide to size down depending on your current confidence? Because when you're having, like, this is something that has personally happened to me, and this was
Mhm.
something, you and I were talking about,
Yep.
where, we have 2 weeks, 3 weeks. I know that my greatest like streak has been over like 28 days, just straight up green.
Mhm.
And after that, you start to get overconfident. You know what I mean?
Yep.
So, at what point, knowing that you're self-aware, knowing that you know your emotions and how you react to these emotions, at what point do you decide that, okay, I'm green, I'm either going to take the day off, let myself just come back to earth, or
Mhm.
at what point do you decide, okay, I'm not going to take irrational trades or just size up just because I'm like super green?
Yep. Okay, this has happened to me personally. I'm also improving on it. It happened recently. So I was on my green streak. I made around 40, 50K in 4, 5 weeks without seeing any red week. Like I saw a few red days here and there, but I was on my green streak if you look at the weekly stats. But then I was on big size because I made around 50, 60K in the last 4, 5 weeks. And then the red week I had, I lost 18K in that 1 week. So because I was on big size. So, and then what many traders do and what I could have done is that once I see that 18K, I can see, okay, I made 60K in 4 weeks, then I lost 18K in 1 week. My account is down to 18K minus, oh, sorry, 60K minus 18K, 42K. And now I can go back from 42K to 10K, or I can reduce my size, gain the confidence back, and go up from 60K. So that's why if you look at my equity curve, I have like big green weeks, then I chop around for a while, then I go up again. That's what I've been doing for the past 1 year. So as soon as I see, I was on big size, so I don't blame myself for it, because people are scared of green streak, but green streak at the time you can increase your size, because I was increasing my size. I reached 60K. If I would have been on my small size, I would have only made 20, 30K on that green streak. So I made 60K, I lost 18K. Okay, so now is the time to come back to earth and trade small size again. So I lost 18K on that week. The next week, I never try to make those 18K back, because I know I will go on a bigger hole if I try to make that 18K back. But I started with small size again. So if I have a red week after a big green streak, it's time to go back again and start from scratch.
Right. And how would this, do you think you would decide to do the same steps on a red streak? Or do you think you would, because a lot of people after they have red streaks or sometimes, they tend to revenge trade. So
Yeah.
they're like, I want to get that money back. And this is something I felt personally myself.
Yeah. Yeah.
But how do you cope with that?
Yeah, eventually you will get out of it, because when I used to have my red days, red weeks, I used to think that I have to make everything back in a single day. But it doesn't work like that, because if you try to get everything back in a single day, and if you lost 10K in maybe if in your red streak and you try to make 10K back in a single day, you can go in a bigger hole. You can lose 5K, because you can't make 10K by risking $500. Some people do on 0 day to expiry. But for me, if I'm on my red streak, I don't increase my size, because second week of October, I went down to 1 to 3 contracts. Like on my hotkey, I never pressed more than 3 contracts. I was less than 3K position. Even after reaching 6 figures, I know when to go back to small size, because I have given a lot of time to this thing to work out to reach 6 figures from trading from 3K. And I know that what steps I took at the beginning, I have to take the same steps to get this account to 1 million. So if I'm on my red streak, it's okay. Like everyone has their red streak, but I'm not allowed to increase my size on red streak. That's my rule. I don't ever revenge trade. One day I did. I told you about that. I lost 11K on that particular day, on that one day, but I made it back. I ended the day at 5K. But it's all about revenge trading. I know what happens with revenge trading, and I know how hard I have worked to gain this account, to make this account from 3K to 6 figures. And I have to take this account to 1 million and multiple millions as well. So if I keep repeating the mistakes that everyone does in trading, you won't be successful. So you have to take it in that way. Only maybe those people who learn about trading, maybe 5% are successful. Like if you have a community of 1,000 members, you don't have people more than 50 who are making money from trading. So that is
Right.
how much 5%, right? So and those people, 1,000 people, and from that same community, they have access to the same courses and everything. But only 5% of the people still make money, maybe 50 people. That's also, I'm exaggerating, maybe 20, 30, those who are consistently making money. And so that is a stat that you have to keep in mind. You can't do the same thing that other people are doing. So if other people are increasing their size on their red streak, you can't do that. So just think the other way around.
Right, right. So just to finalize, for anybody having a mental barrier, whether it's a number mental barrier or just people having trouble setting up their account or entries or anything like that, let's say you were able to talk to yourself at the beginning of everything. What would be a couple of tips that you would give to yourself at the beginning, knowing all the things you know now?
Okay, so mental barrier, we also talked about this regarding your account. So mental barrier comes in, you have to remove the source of the mental barrier. Instead of fighting the barrier, you have to remove the source. For example, my personal experience, I was having a hard time breaking the 25K mark. So instead of fighting it, I went from 24.6 to 23 to 24 to 22. It took me like 1 to 2 weeks to pass that 25K mark. But what I learned is that instead of fighting that barrier, just stop looking at my account size. So now I know if I'm around 25K mark, 50K mark, 75K mark, 100K mark, that can be a mental barrier for me. Once I reach 95K mark, I don't even look at my account for the next 10K because I have a feeling that I have reached 97K, 98K, or 99K, something like I have a feeling. But looking that on your equity, on your account size, looking at the numbers, it just makes it real. So as soon as you see, even if you are at $99,990 and you just have to make $10 to make it 100K, make it six figures, that is a big deal for you, right? But if you just if you look at the numbers and you change it to reality, now you're trading just to make it six figures. You're not trading to make money. I mean, you're not trading the chart, you are trading your PNL at that time.
Right. Yeah. Yeah. I think that's
For me, I think I had a major barrier at 25K. 50K was easy to pass because I had one big day. 75K was another barrier. And then 100K, I crossed it. I had one big day. I went from 95 to 105 in one single day. So that was very fortunate. But yep, that's how I deal with mental barriers. It's not, don't fight it. Just try to remove the source of the mental barrier.
okay. Well, Jay, I just want to thank you so much for your time. I'm more than sure that everybody got a lot of information through this and a lot of help.
Thanks for having me as well, because I also learn a lot from these interviews because it's all about self-evaluation as well. If I do these interviews, like for example, Jsai asked me a few questions, you asked me a few questions, so it gives me time to reflect back on my journey and see what I have been doing so that I can continue doing that. Because at a point you get confident, you get overconfident as well, but I try to not to do that, and I go back to my journey. And then that's what I told you, like I went back to 5,000 position, and then even if I was making $100, I was like, I made 2% of my account. So that's what keeps me accountable, going back to my journey, having a journal and keeping track of my trades and everything. I used to be happy when I used to make $100 a day. So it's all about keeping yourself accountable.
Right. I think that you are the sheer example of exactly that. So again, I just want to thank you. I want to thank everybody for watching this, and that's going to be it from us. So I hope you guys enjoyed, and of course, all of Jay's Instagram tags are going to be in the description down below. And I hope you guys tune in for the next interview as well. And again, Jay, thank you so much for everything.
And thanks for having me. Good
Jsai,
luck.
thank you so much as well.
Thank you.
All right.
Thank you. See ya, guys. See ya.